SAFM's market update with MoneyWeb, brought to you by Discovery Invest, a licensed financial services provider. Europcar, they had a big launch today, Dave. I don't know if you know, if you're aware of that. No more Imperial, now it's Europcar.
Oh, Imperial have changed?
Imperial gone,
okay.
yeah, Imperial gone. And Ram Barkai, I'm sure, sorry, Dave?
No, so is this one of Hubert Brody's sale, or is this just a change of branding?
It's a change of branding. Okay. In fact, we picked it up on some of the airports a little while ago, but now it's definitely Europcar. To the degree, Ram, that when you go with your platinum card, you don't stand in speed line anymore. You stand in an area which says waiting line or something along those lines.
So I can tear the platinum card?
No, keep the platinum.
Keep it, okay.
That's the one that you flash when you're going around the... Well, I guess now you get a Europcar platinum card rather than an Imperial one.
Well, do they upgrade you automatically?
Perhaps.
Okay.
We should ask them.
I'm definitely going to do that.
Well, Ram, you are the top story tonight because your share price has been performing as like it's had a fire underneath it, up 50% in the last 3 months. And yet it's not really an institutional stock. So it wouldn't have been the big guys who are buying your shares. It would be perhaps smart people.
Yeah, our share has dropped significantly before it came up. So if you look to where we were about a year ago or 2 years ago, we still have a lot to catch up. But we did have some interest from institution as well.
But the anticipation at the time that your shares were trading 50% lower than they are today would have been part of the panic, I guess, that as a smaller player you would be more vulnerable.
Yeah, 100%. I mean, remember, we came with a 67% down interim results. And I think the panic was probably a euphemism to what happened about 9 months ago, 6 months ago. And I think when people realized, specifically when we came with the trading update, the share price went up about 23% since the trading update. So I think a lot of people expected the second half to be the same or worse. So the fact that we managed to turn the ship around in the second half probably helped us a lot.
Being smaller and more nimble, I guess, helps. But what was it that worked in your favor?
Probably a few factors. We started reacting to the market early January last year. I think I started with a moratorium on staff hiring in January last year. We started cost cutting even before that. Just because being a small, nimble player, when the big institution sneezes, you can catch swine flu rather than just a cold. And we liquidated a couple of hedge funds that weren't performing well. Cost us some money, but we just closed them. We also repatriated the funds from overseas. It was a bit of a gutsy call at that stage. We knew that we need to have liquidity on board and not be in a position that we don't have liquidity.
How much did you bring back?
It was just under 70 million rand.
Because we've had this debate often and what you were doing with the 70 million rand overseas, but wow,
you know,
that was inspired.
It was a leftover after the African Harvest acquisition, and I think like every very smart investor, you know, you buy at the top and you sell at the bottom. So we had money overseas, and we probably hoped in some ways that because everyone been waiting for the rand to weaken, and no one a year ago when we brought the money in October, the rand was 10.22, and no one ever thought this could be election changes, the rand could be below 8. So luck and brain. Probably more luck than brain, but I'll take it.
It's a lot of money, because if you have a look at your pre-tax profits of 87 million in the year, that must have been 15, 16 million rand difference had you left the money overseas, because you would have had to have written that down to the current 8 rand to the US dollar, and there's a big knock you would have had to take.
Yeah, 100%. I think also the yield, the investment, the return on investment overseas for the last 2 years, we were all not hoping for the rand to weaken, but we were all hedged against the potential rand weakness. But the yield that we got was about 1%, and now it's probably even lower. So we did put it in 10%, 11% South African yield, which done us well for the bottom line as well.
So all round, it's been a year where you've had a difficult time, but perhaps investors were expecting, certainly as recently as March, that you'd do a lot worse than you have come up with, 28% down. Your dividend of 11.5 cents a share puts you on a pretty juicy dividend yield, but is it sustainable? Is that safe next year?
You know, I think, like I said, as the crisis started, I always had a confidence that Cadiz is fine. We know our balance sheet. We weren't that geared. We don't have risk, any toxic assets. Probably our only asset that we really have is a convertible pref into Makana, which is doing well, and it's fine, and some investments in some of our hedge funds or very conservative products. So the issue for us wasn't survival from monetary point of view. The issue is probably people, mostly, and that's probably was a big challenge and focus in times of panic and crisis, not to forget that it's not just about money. There's people there that everyone struggle financially at home and to look after them.
And have you managed to do that? Have you managed to retain staff?
Yeah, we actually had a great retention of staff, you know, at the Deloitte Financial, the best financial company to work for, we were #1, and it's 100% by employees. And I always say that I'd like to believe that people stay with us because they like us rather than they don't have a better place to go. And yeah.
Ram, just to close off with, in the year ahead, so you had a difficult situation in the past financial year. You've come out of it fairly strong. Does this mean that you now have opportunities which perhaps were not available a year or 2 years ago?
You know, the future is still uncertain, and I think, despite the fact that I think that possibly the market have bottomed out a while ago, in terms of turbulence, it's not over yet. I mean, you mentioned something about U.S. budget deficit. We always get what comes from the U.S. 6 months later, 9 months later. So the hard times are not over. However, the panic is over. We're good at hard times. We're not leveraged. We have cash, and we've got a lot of call options in the business. You know, our performance on the asset management has improved significantly. We won some big mandates. Securities are doing well. Our inflow on the retail, I think our inflow was about 144% up on previous year, where the entire industry was about 14 basis points down. So there are a lot of call options in the business, and I'll continue to position the business for growth. When it's going to happen, it's probably the billion-dollar question.
Ram Barkai is the Chief Executive of Cadiz.